everybody. Happy Wednesday. How's it going out there? Hope you're having a good day here so far. I'm going to slide over here a little bit, and that looks a little bit better. How's it going? This is a quick show that we do to update you guys on the stock market here. We're financial advisors, of course. We're playing a game if you'd like to play. It's called Guess the Dow. Go to jazzwealth.com/Guess the Dow if you want to play along. And we'll send you a $100 gift card if you win. No marketing or anything included, just a simple game you want to play. If you're the winner, we'll send you that gift card. Also, as a reminder, next Monday there will be no closing beat, and also next Friday there will be no closing beat. Still full schedule this week, but and you got Martin Luther King Jr. Day on Monday as well. So that's that, pretty much it. Tomorrow, our class for customers in the dojo is going to be on the backdoor Roth IRA. We'll go over how to, all the details of it and then how we actually make it happen for you here, so you know what to expect if you fall into that category. Remember, the Roth IRA has a max income limit. If you make too much, you can't contribute directly. You got to do what's known as a backdoor. You got to make sure it's done right, or you get in big trouble. So we want to make sure you do that correctly. We're going to show our customers that. So that'll be tomorrow at 8 o'clock, as it says down there at the bottom there. Let's take a look at the stock market today. You got the S&P higher by 6. You got the Dow higher by 91, and the NASDAQ added 7 on the day. It was kind of one of those days where there was a couple things that really stood out, to be honest. We were pretty much positive into the phase 1 trade deal signing, and then we kind of lost some steam after that and pretty much faded into the close. Although it was a positive close for the day, it still wasn't as strong as it was. It was looking really good first thing this morning here. The NASDAQ, same thing, right? We started off strong, everything was looking good, we sort of faded away towards the end of the day. The Dow did actually close above 29,000, and that's a new record close for the Dow. Remember, we covered that before. How many times? We covered all the stats on crossing each 1,000 threshold and like how many times we crossed back and forth and all that good stuff. So we did that. But the Dow held up its own there. It was like UNH was one of the big ones today. Goldman Sachs helping out a little bit as some of the other stocks sold off there. But all in all, you got the S&P sitting at new highs there, or almost at new highs, basically. The trade deal is signed. President Trump said the tariffs will come off when the second trade deal is done. That was his way of starting the negotiation on phase 2. You also had the Beige Book come out today, and some highlights from that. I read through it, but the highlights basically were the Fed thinks economic activity grew modestly, was the words that they used. And they're actually referencing the last 6 weeks, by the way. So that's the time period that they're analyzing and talking about. They talk about consumer spending growing moderately. That was something they focused on. Home sales was a negative. They said home sales were flat overall. Residential rental real estate was very strong. More people getting into that space there. And they said expectations for the economy in the short term, I think they used the word near term. So in the near term, remain favorable. So very happy there. They also had their producer price index come out today, which was basically as expected. No reason that the Fed is going to be raising rates as of now, at least the data that we have to show that. Let's go through our sectors today, because there's another something that stuck out that was interesting. The, oh, hello. Let's turn that off. Maybe we don't need to hear that. So you've got the utilities, right? A lot of the defensive areas stuck out today as being quite strong, right? You got utilities breaking out, looking pretty good there. Defensive areas, that's the focus. So utilities, gold, consumer staples, healthcare, all looking good. Let's start with utilities on the screen here. Fresh breakout, which we've kind of highlighted with the charts there. You got gold we can talk about real quick. Gold added $9 today. There you go, a little bottom picking going on with gold. Maybe or some dip buying. Let's say it dip buying, not bottom picking, right? A little dip buying going on there. You had REITs sticking out today, coming off the 200-day moving average, continue to look real strong there. All is good for REITs. And then you had consumer staples hitting new highs as well. So all day, this didn't start towards the end of the day. This was all day that this was going on, that you had this defensive mindset. So probably anything you see on TV, Bloomberg or whatever, they're going to point out the fact that there was a lot of defensive sort of strategy playing going on there. Elsewhere in the markets, you got financials lost about 0.5% on the day. You had mixed results here from earnings. You got a lot of the banks reporting earnings, remember. So that was kind of how that one started. We'll go through a few of them. You got BlackRock. Added 2.3% on the day. They beat on earnings, beat on revenue. Their ETF business on fire. So a lot of money coming from that. They are, by the way, the largest asset. Holy cow. Hold on a second. We're going to fix that. There we go. I'll fix that there. I don't want to hear all that. BlackRock is the largest asset manager on the planet. right? They're $7.5 trillion or almost $7.5 trillion. So looking good there. That's BlackRock. Remember, Deutsche Bank said that they will be an outperformer, and so far they were spot on, man. BlackRock is outperforming the stock market, which is, you know, it's just fun to follow. But they are outperforming the stock market here through earnings season, so looking pretty good there. You had Bank of America. Actually, it was a good earnings report. Bank of America was down about 2% on the day. They beat on earnings there. The focus, remember yesterday we were talking about net interest income. Because of the low rates, banks aren't making as much off your deposits there. That's all rate driven there. They did point out that bond trading was good. That carries over from yesterday. Remember we saw that in some of the banking stocks yesterday, that bonds trading generated a profit that helped offset some of the weakness in other sectors there. Goldman Sachs also was basically flat on the day, actually. It did you know, pretty volatile day actually, but it closed the day pretty much flat. They also had a sharp drop, sharp increase in their bonds trading, up 63%, so looking pretty good there. They did miss on earnings, and they also had that $1.1 billion, $1.2 billion charge for the 1MDB scandal. That was one of the negative signs there if you happen to be taking a look at that. If you took that out of the equation, they had a really good earnings season. So it's known as like a one-time charge, whereas Wells Fargo, that was different. Remember, Wells Fargo had $1.5 billion in ongoing litigation fees, the key word there being ongoing. There's no end in sight. With Goldman Sachs, it's just a one-time charge that's done's over with. Hopefully they can put that behind them. Oh, also, by the way, Goldman Sachs said that they have officially closed their entire position on Uber. Now, this would have been done before the end of the year. This is not something they just did today, but they announced that they are 100% out of Uber, no longer playing along there. Speaking of Wells Fargo, down again. That's a pretty interesting drop. Don't you like that? If you're like a counter trend person, you kind of see that's a little overdone in the short term, down 2%. So, yeah, we'll see what happens. Regional banks were the weakest out of the group. If you took the banks as a whole and then you sort of broke them into different categories, regional banks were the weaker ones there because they're not able to benefit from this bonds trading thing. So that net interest income really hurts them a little bit more because they don't have extra trading divisions and things like that. But First Republic, they reported earnings yesterday. Everything looked good. Today, they basically gave it all back up. PNC was the focus today. They reported earnings down 3.6%. They had higher costs overall. So just, you know, not good for them. With banks, what people look at, you know, you use fundamentals and for looking at different stocks. Some people do, and you use price to earnings or price to book, things like that. With banks, everybody uses an efficiency ratio. You like to see basically the money that they have, how efficient are they being using it with their cost. Not good for PNC. That's kind of the geeky long explanation there. We could do more if you like that stuff. But PNC, higher cost there. They did announce $1 billion or $1.05 billion in a buyback there that the Fed did approve, but that didn't help. Zions Bank also lower on the day by 2%. It's just a handful of names in the regional bank space that were weak. Overall, semiconductors pulled back just a little bit today. Taiwan Semiconductors is going to be the reason for that. This makes up about 13% of the overall category here. So if you were to use like the SMH, I bet you if you looked it up, it's really close to 13%. I'm at 13 point something. But because that stock, Taiwan Semiconductors, was lower on the day, that hurt the overall sector. And Micron Technologies was also lower. Remember, they get a lot of their money from China. So it's down about 2.33%. Taiwan Semiconductors is not done being volatile, by the way. They have earnings coming out tomorrow, I believe. It is tomorrow. It is tomorrow. Yep. After the close, I believe. So that's that one, a little bit in the semiconductor space. In the retail space, you might have noticed a little weakness there today. Target. It's going to be Target, man. Had a bunch of great quarters in a row there. Holiday sales just weren't what they expected. If you dig into it a little bit deeper, it's going to fall into the electronics category, the toys category, and a little bit into their, was it the home category, I believe? A little bit of weakness there, but they've been on fire, I think, so they kind of get a pass, right? And think about all the people that missed this rally that are saying, well, hey, maybe this is attractive now, maybe it's something I want to participate in. For me, I kind of thought, uh-oh, if toys are weak, let's go look at stocks like Mattel. Mattel down today. That's all because of Target, right? Because if toys were weak, also Hasbro, but if they were weak overall, does that mean that Target did something wrong, or is that a sign of what people are actually buying? Is everybody out there buying iPhones and the thing, you put the white things in your ear and they're really expensive, and you know what I'm talking about. Listen to music where it costs you a lot of money. Is that a problem? Or is it a shift, or is it just a Target problem? So today, you had Hasbro and also Mattel were weak on the day. Just pointing that out there. All right, if you go over to healthcare real quick. So healthcare was strong today. More defensive type thing, just continuing this overall rally. UNH is going to be helpful there. It was the best performer in the healthcare space. They beat on earnings, all looking good there. They beat by 15 cents and kept their guidance. Just looking really good for them. Really big profit. I found it really interesting that, the debate last night, the Democratic debate, actually got a chance to watch it. It just a lot of jibber jabber about healthcare, right? And it's 10 cents for this or that, and we're going to be able to pay everybody. And don't worry about the $10 trillion and all that. Let's do something real, right? This healthcare thing is ridiculous. And you can see it, right? United Healthcare saying, besides losing, like JP Morgan is one of their customers there in the commercial space, besides that, they're killing it. Profit's doing well. Everything looks really good for them. It's sad. 73% of the stocks are above the 50-day moving average in the S&P 500. That's a 1% downtick from yesterday. Not really a big deal. There were 69 new 52-week highs, and guess what? A utility was the best performing stock in the 52-week high list today. That's the first time in over 2 weeks that that's been the case. 2.5% for Edison International, as that whole sector enjoyed a pop there. You got ICE. Want to point this out. This is the Intercontinental Exchange. Trying to break out. Look like it kind of did. Closed up there enough. Volume was okay. Could be better. We'll see what happens tomorrow, but that one hinting at a breakout. I noticed Visa was continuing there, looking good. Visa overall catching that positive momentum and the headline momentum at the moment. And then you had home builders. Lennar was the leader today, added about 2% on the day. You got Pulte Homes higher as well, hitting new fresh highs. And Toll Brothers happens to be one that we own here, so we're happy to see that moving higher as well. Typically a very volatile stock. I pointed this out last time when they reported earnings. A very volatile stock near highs, but taking off there, helping out one of our portfolios here at Jazz. So happy with that. If you want to see all of our portfolios, just go to our website. You can actually see them on the website under portfolios, and then it lists them all out. If you just click on any of them, you can actually see the performance and everything, just to kind of see how things are going there if you're thinking about giving us a shot. Shake Shack was higher today, about 7%. That continues from yesterday, a little bottom picking action there. Goldman Sachs put a price target at 115, and in case you can't see it on the chart, that's off the chart. 115 would be way up here where you can no longer see my mouse anymore. That's about a 65% rally that they're expecting in the next 12 months. Not to mention it'd be new highs, right? So Goldman Sachs quite positive there. And Shake Shack also said they're looking to expand into China, Singapore, and Mexico. So everybody's pretty positive about that. Beyond Meats fell back today, 8.5%. Bernstein downgraded the stock. They basically said, it's fairly valued, guys. Quit buying the stock. It's fairly valued where it's at. And so the stock was just a little bit lower on the day, which is not a big deal considering where it came from, over a 30% rally. So looking pretty good there. And Peloton got a little bit of a boost today, 4% higher. Remember, these guys don't make any money. The last two stocks that I mentioned, they don't make any money. But Wedbush was positive on this one. They initiated coverage on this one. They basically said there's no threat to this business model. They expect subscriber growth to continue to increase, something like 4 million subscribers and all that. I don't know. I'm starting to see a lot of commercials. The other day, I thought I was watching a Peloton commercial, and it was a Nordic Track commercial for their bike with their app and their service and all that stuff. And then not, 5 minutes later, the bike commercial, same format and everything, but it was for Bowflex. Was it Bowflex? I think it was Bowflex. They got their own bike. So I don't know about no competition there, but that's what Bernstein happens to think. And not Bernstein, Wedbush happens to think. And we'll see what happens. They have a $38 price target on that one, by the way. So that puts you up over highs here as well. It's about 20-ish% from where it's at the moment. So that's that. Tomorrow you've got more earnings. It is earnings season, so hang on tight. You got Bank of New York Mellon. You got Schwab coming out. It'd be interesting to see how they're doing, working through their transition, buying out TD Ameritrade. Morgan Stanley coming out tomorrow, and CSX Railroad as well. For dividends, you've got CBRE Realty paying out $1.30. General Dynamics $1.02. WD-40 yeah, paying out 67 cents, Foot Locker paying out 38 cents, and Zotis paying out 20 cents. If that helps you there. We also have econ news coming out tomorrow, which will mostly be focused, I think, around retail sales. You got the Philly Fed early in the morning there, but retail sales will be interesting. Remember, the ratio between people that buy groceries versus just going out and eating is the closest it's ever been. So we keep watching this every time they come out with this. Will this be the announcement that comes out that shows more people spend money eating out than buying their food at grocery stores? It'll be the first time in history. We'll see. And we'll see what happens. I'll keep you updated on that one. All right, I'll take a chance and try to answer your questions, then we'll wrap this thing up and see what we got going on here. You guys working on talking about some positions there? All right, cool. The NASDAQ, I think if it was trying, what are your use? If I was trying to do what you are, if I use Q, oh, you're talking about something else. Sorry about that. Kevin, I don't see your question there. You got to post the question again. I see your question below. Maybe that's what you're talking about. Hypothetical question. If I was to buy 2 or 3 ETFs every month for the rest of your life, which 2 to 3 ETFs would you suggest? Those or a different combo? Meaning you were going to add 2 or 3 more, or you were just thinking, I'm always going to have these 2 to 3. Either way, it's a very tough question to answer. I don't know how old you are. I don't know what you're shooting for. I don't know how much money we're talking about here. I don't know what your other investments look like. I don't know if you're being too risky, if you're not being too risky. So it depends, right? Do you wake up in the middle of the night and worry about your investments? Do you really care less because you're a young guy and you're like, whatever, if it wiggles around, that's fine. There's a lot of considerations there. There is no chance I'm going to just volunteer a random set of ETFs. Now, we have done in the past, we've gone through with customers to say different categories, right? If you had to just pick one area, which would have been the best area to go through? Categories, not ETFs. Of course, you could translate those to ETFs, but just for fun, because a lot of people look at the S&P 500 and they say, well, I'm supposed to buy an index fund, so they do it. But in reality, there are many other indices that are better performing than the S&P 500. But it's kind of like the retail boilerplate, like just go buy it and you'll be fine. I think a lot of people ask that question though. Well, what if I want to do better? Or what if I'm willing to take on more risk for more growth? And that's sad that gets lost in the translation there. Thank you, Morton. Rite Aid, by the way, yeah, I don't know why I'm so fascinated by this stock lately. It's not like something I don't know why we started talking about it to be in the first place, but yeah, finally bouncing off the lows there. That's a 2-day win streak after that. Very impressive move. You can see by the chart of Rite Aid, by the way, that's not something that happens normally. So it's just kind of fun to watch because normally it's slow and steady, a little volatility. That is wild there for Rite Aid. I just thought it was kind of cool. Yeah. Do you think UNH will continue to the upside? After today's move in the short term, you would expect technical traders to pay attention to that. Yeah, you would. Just positive, strong stock in a strong sector. Great reversal day today to put it back at highs. You'd expect that that's going to grab some of the technical traders to come over and want to play. Yep. Oh, yeah. Does it seem like Qualcomm hasn't really participated? Yeah, kind of. Yep, I would agree with that. It's not that it's weak. Well, we can put it up. It's not that it's weak overall. It's just that even individual days where you had this category moving higher, you didn't have Qualcomm moving higher. That's a bit of a frustration. I don't think there's anything to worry about at the moment, but yeah, it's not really cool to see that. You got obviously good support, strong uptrend there. It's just kind of odd that it's been doing its own thing lately. Yep. Oh, yeah. Harry, you and your ACB, I have no idea if that is a bottom. You can't even say, well, that looks pretty strong. I mean, the volume's good, but look what happened back here. Strong volume, you had everything looking good, and then it just petered out. So I'll keep the same comments here. There is no need to guess the bottom on this stock. Let everybody else guess the bottom. Watch everybody else take their profits, and if those profits don't exceed the prior low, then consider maybe trying that next bounce there. Keep me posted, though. We could talk about it as if it does rally from here and you do see a higher low, we could walk through it, but there's just no need to say, I think that's the bottom. Yep. Cool. All right, looks like we've answered your questions. I appreciate you guys stopping by here today. I'll just double check, make sure I covered everything I wanted to cover, so we are looking good there. And that's it. Well, I will say enjoy the rest of your day or evening. Remember, tomorrow, our class for customers on a backdoor Roth IRA. I'll be ready for that. We'll see you then. Otherwise, we'll be back here for the closing beat tomorrow as well. Enjoy. Thank you so much for watching.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.